Hey folks, Dan Frio here with your closing bell for December 1st, 2025. So what happened today? Well, two main things happened today that we're going to talk about. Which one's going to win out? Well, I'll give you the two that we're going to talk about, and then we're going to break it down, and then you decide. So here's what we're going to talk about in today's video. Japan. The Japanese administration, they're increasing their interest rates. Why is that a concern? Well, we're going to talk about that in a second. And it looks like President Trump is officially, well, not yet officially in the public, but he knows who the next Fed chair is going to be. So these two pieces of information hit the markets today. If you look over to there, which one do you think won out? Well, you might be a little surprised. So folks, my name is Dan Frio. I come in each day to help explain to you guys what in the heck's going on with those and the whys behind it. So let's get over to today's show. Here's what happened. Mortgage rates went up. It's obvious right through here. But let's go over to why. Because here's what we got over the last few days during the holiday weekend. We ended on a great note. We were like, okay, we know who the next Fed chair is going to be. He's going to cut rates, so that's good for the markets. Everything else seemed to be stable. And then Japan comes out of nowhere and this happens. So I know this is going to get a little lengthy. Okay, I'm going to go over to Rick Santelli at CNBC. You have to understand the bond market. Now, if you want to fast forward through this, that's your prerogative. But if you're maybe a loan officer or a realtor, you need to understand this stuff. If you're a person, a homeowner, home buyer trying to monitor rates, let me give you a piece of advice I can give you if you're a homeowner right now. Are you trying to figure out what's the best interest rate or when should you refinance? Go to my website if you would, right over here, the rate update, and you can actually put in your information right through here. I created Rate Watch 2.0. All we're asking you to do is put in your mortgage information in there and let me know what interest rate you'd be interested in refinancing. When the rate hits there, I'll reach out to you and go over the new numbers. And yeah, we don't sell the data. It will be me monitoring this stuff. But let's get back over to today's news. Here's what happened to the Japan markets, and then this is basically what the repercussions were on our markets, and you can see what happened to the bond market. Stock market's not looking any better. So, Rick, take it away and help explain to me and our audience, what does Japan have to do with our mortgage rates?
And Rick, this really sent reverberations globally. People say it's why Bitcoin's down today.
It may, indeed it may, and we're going to get to the Japanese side at the end of this because I have some interesting charts. Let's start at the chronological beginning, coming into our time zone. As you look at 2s and 10s for 1 week, they popped out of their recent range. They popped through that ceiling, basically just under 3.5 for a 2-year, right around 404 for a 10-year, and it happened, well, it happened along with all the other issues going on globally. Look at a 1 month of 2s and 10s. Really have reversed course. And once again, I don't want to sound like a broken DVD, but we have hard time staying under 4%. And once again, that does seem to be the case. Now, let's get back to Japan. On the 19th, most likely we'll see a rise in rates by the Bank of Japan. They've been hinting they may do intervention in the currency market, but they learned many, many years ago, after decades of intervention, it really wasn't something that worked out in the long run. It was a waste of money. However, we're just coming off 10-month highs against the yen and the dollar. The euro currency was at 33-year highs against the yen. And today, as Kelly reported, 10-year yields hovering around 186, highest since '08. If you look at a 2-year on that chart, also the highest since '08, has never been above 1% since then. So all of this, of course, is affecting our rates as well. But maybe it isn't going to be the contagion so much on the actual rates moving up as it's going to be about all the issues going into supply and bigger question. And I'll leave you with the biggest question of all. Will the Japanese investors stay more at home to try to control their markets versus invest in our long-term notes and bonds, which has been a big help, of course, as we issue more and more along with the rest of the world? That's the big question. Brian, back to you.
So if you stay till the end of that, here's what he's talking about. So let's get over to what we think mortgage rates are going to do and the whys. Okay, so I'm going to go through this pretty darn quick. To help understand this, you have to understand the bond market, what he was just saying. So the bond market is basically, here's what we focus in on right through here. We focus in on the MBS. This is a mortgage bond. All you have to understand is this number right through here. If the number goes up, Rates are going down. Well, the number went down today, so what happened to rates? Well, they went up. Okay, so here's what happens is the Bank of Japan, they come in and increase their interest rates. Okay, so that's going to draw more investors. So a lot of Japanese companies and governments and so forth, they invest in the U.S. Treasuries, and that is our U.S. bond market, and the mortgage bond is a piece of that. So now what he's saying, Rick's saying at the end, well, the Japanese, their rates are going up. It's going to attract more buyers, maybe less buyers from the United States. But are the Japanese buyers who usually buy a lot of the U.S. Bonds, are they going to just say, our rates are good enough now in Japan, we're just going to keep our money over here and not buy our bonds? What would happen then? Well, that's where this comes into play. That's going to mean less demand for this bond. So less demand, it's going to bring the prices down. That's what's happening today. So the assumption in the bond market is this isn't going to be good news for our U.S. bonds, and part of that bond market is the mortgage bond scenario. So this is bad news for bonds today. When this ticks down, mortgage rates go up. That's a pretty big tick right through there. You go across through here, the equities markets didn't like this as well because they're thinking now is, okay, the Japanese money, where's it going to flow? Well, maybe it'll stay in Japan as these rates get higher and higher and higher on secured money. So across the board, we're having not a very good day on Wall Street. This is the un-Cinderella story. We have equities all the way across the board. The VIX is up. That means anxiety on Wall Street's, it's going up. And you go over to crypto, it's getting hammered. Let's go over to oil. And this is an exact opposite of a Cinderella story. We have oil up, which is inflationary, but not when it's at $60 a barrel, and you have everything else going in the wrong direction. Economic news, there wasn't really much today. There were some manufacturing numbers. I'll say they came in on point. So now, what are we looking at for the rest of the week? Well, here's what we have coming out tomorrow. We have, on Tuesday, we have the JOLT index. This is going to tell us some news about the jobs market. That's the big data coming into the Fed meeting next week. The rest of the data for the week is on Wednesday. We're going to get ADP payroll numbers. Not excited about that. And then the rest of the week, Thursday and Friday, we're going to get a lot of data that's going to be factored into what the Federal Reserve and the markets are going to do. So stay tuned each day, and we'll go over pre-market where I think these are going to go and the whys behind it. And we also have live events each week, folks. But now we're going to go over to the Federal Reserve. What are they expected to do at the next meeting? Because if you're a homeowner right now, you're like, okay, should I refinance? But if you're a home buyer, what are you doing? So I'm going to introduce a new thing at the end of this video. It's going to be lock or float. And I'm going to have that in our caption. So stay to the end of each one of these videos, and I'm going to tell you my recommendations should you lock or float. But right now, here's what the markets are telling us what the Federal Reserve's most likely going to do in 8 days. That's their next meeting. You go down through here, the probability is now 85%. I forget what it was this morning. I think it was right about that range. I did see a report saying it was now 90 or 93. I don't see it in this. Let's see if it's on the aggregates. I don't think it's there as well. So there's an 85% chance the Federal Reserve is going to cut rates. I thought this was going to change at the last minute. We do have some major data coming in the rest of this week. So could that move that marker? Well, let's get over to what my thoughts are with this. So here's what we're going to talk about. We're going to talk about, do we lock, float, or what do we do? So this one's pretty simple. Here's my chart. I'm going to give you guys a chart each day and just show you where I'm at for the day. So right now, I'm saying lock it in. I don't think there's any reason for rates to really move. So I keep saying my spectrum of where rates are going to be is 5.99 to 6.375, and we're right at the top end of my range right now, but I'm still saying, okay, I'm locking right now. You know, if you locked the other day, like I said, you might have got 6.29, something like that, a little bit better, but there's not enough, there's not enough there to say, okay, let's chance it. Okay, if you're closing 31 to, a month or 2 or 3 from now, I'm floating, because there's a lot of data coming in between now and then, and I don't think it's anything detrimental that'll really spike the markets. Now, if you're closing, let's say you're building, what do you do? Okay, we're going to have a whole new cast of characters at the Federal Reserve coming in May. So if you're looking to build right now, you're not going to be done until May, June, July, August. I think you're going to see some pretty nice rates there. I don't think they're going to be, much higher than they are today, but there's really no news yet that should bring them much further down. So I'm going to stay in my type range right now of 5.99 to 6.375. So that's my recommendations for that. But first off, folks, let me let you know know who I am. My name is Dan Frio. I've been doing this for over 35 years. I'd love to help you navigate if you're looking to buy, maybe you're looking to refinance, maybe you even need assistance with a reverse mortgage, or you're an investor, need like bank statement programs and things like that. I'd love to help you. I've been doing this for 35 years. The good news is, even better than that, I'm licensed in all 50 states as well as Puerto Rico. So the bank that I work at provides me those licensing, and also we have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? Well, let me talk about that in a second, but let's get to this headlines first. So here's what we're seeing. I'm just going to jump across this. Bitcoin is getting clobbered right now. When we used to do Stock Talk Tuesday, we used to talk about Bitcoin and other things, and I always said, only use money that you're basically, you would take to the Vegas with you if you're going to look at invest in Bitcoin. It is a scary market that you got through here. But let's go through here. Will the Federal Reserve cut the rates at the next meeting? You just saw it here, folks. There's an 85% chance of that. It's Cyber Monday. We're going to see how the consumers faring on this, and U.S. manufacturing doldrums as tariff headwinds persist. So taking out of this, I'm staying out of the cryptocurrency markets right now. I'm still buying on dollar cost averaging. Cyber Monday, it's going to be interesting how the consumer is doing right through here. That's also going to play a role in the manufacturing. The healthier the consumer, the healthier the manufacturing. So we also need an end to this tariff thing, because tariffs are starting to hit the markets right through here. You can see right through here, Costco joins companies suing for refund if Trump tariffs are deemed illegal. Folks, this is going to be the biggest story in a long, long time as soon as the Supreme Court takes it up. So we're going to pay attention to that in coming days, but you know my thoughts on where rates are going and where the news is for today. So folks, if I can help you out in any way, please visit me at therateupdate.com. If you're looking to build, reach out to us so we can assure you that you're getting approved using the right credit reports, using the right income, using the right assets, and the most important thing, you're getting in the correct program that's right for you, not right for your loan officer. So keep that into account. So that's our report for today, folks. So I hope you enjoyed it. If you haven't subscribed yet, please do so over there. So every time I post a video, you get an alert and you won't miss any adjustments when it comes to rates, new programs, or just our thoughts on where the markets are going and the whys behind it. Thanks for watching. See you back here tomorrow morning at the opening bell to figure out where the heck are those going tomorrow. Thanks for watching, folks. Take care. Bye-bye.